So when you move on to the market, there's a common word that you listen. You listen through everyone, you get through everyone, those who are in the markets, right, of investing. That is ROI. The word is ROI, right? What does ROI means? For majority of people, return on investment. Means the amount that you're investing, how much returns are you gathering? That's return on investment. But for me, what I stand for ROI is return on information. Return on information means the more amount of information you gather it is defined by the lower you are making your risk is going down, but your profits are rising higher. For majority of people, what happens? More the risk, more the return. Higher the risk, higher the return, right? That should not be the same for you. If you're doing the same thing, then you're no less than a gambler. The difference between an investor and a gambler is an investor can lower their risk without reducing their returns. That is the basic common definition of an investor. When I meet general investor, what they do is they trade markets because either they are retired, number one, or number two, they just want some pocket money or back some stuffs. They want to handle some chunky amount of, they want some side income, side hustle basically. And in order to get that side hustle, what they do is they buy some stocks from the market, right? Once they buy some stocks in the market and they think that it's going to go up, it's going to go down, they buy, sell, they get a discount broker. They are so-called the professional trader. I can do it myself. Investors. Those investors are packed up everywhere. You can get it everywhere beside your house. I guess everyone can relate to me, whatever I'm saying, right? So that is the category of investor I'm talking about. Now, what they do is they don't think there is a downside to the market as well. That is, they don't stay risk averse. They don't have health insurance before moving into markets. They have all their savings invested directly into the markets, which makes them completely grow. They don't have any particular risk coverage for their financial protection. There's a difference. What I'll say is financial information is something, financial education is something. Financial information is loaded everywhere. People like me creating reels on finance is loaded everywhere. You don't have to watch my video. There are tons and tons and tons of video in Instagram, in social medias, basically, right? Who are giving you financial information. But the point is, are you financially educated? And information can be gathered from anywhere, but financial education is what makes you different. What is the difference? Financial education gives you the meaning of financial information. If you don't have financial education, you just have financial information, you can't get the meaning of it. Means you can't have results. If you are doing investing and you can't derive results from that, that clearly indicates that you just have financial information, not financial education, right? And there's a difference. Education means once you learn something and then you apply it and you get the results from that. That's how you become an experience. So there's vast difference from it, right? So before moving into stock market, majority of people, they don't take health insurances. Number one problem, very much important, that is the health insurance. Number two, that I commonly see is what they don't do basically is they don't think that portfolio or they can be wrong over the long run. No one thinks. I have not seen any investor who thinks that they can be wrong in the long run or in the short run. They will think that someday or the other the market will go up or someday that will happen, because they are just buying stocks on their guts instinct, that the moment they think they are right, that's it. And some investor trader, there are variety levels of investors that I see in the markets. But no one has a question that is, how can I be wrong? My question comes up when I move on to investing for my clients' money or whatever it is. I simply ask one simple question to me, how can I be wrong? My team asks, we just conglomerate with the idea. We come to a meritocracy of the idea, that thinking, how can we be wrong? Is it possible that this return will get that? As a result, whenever I think to gather any particular return, before thinking about returns, we think about the risk. Are we protecting the downside? If we can protect the downside, then only we are going and proceeding to take the trade, or else we are not taking any trade. That's so simple, right? But this is where the problem comes in with majority of newbie investors. They think that they have known the markets completely, and they just try to invest everything into the market, and that's where the mistake comes in. That's where the major problems takes in. That is where you have to stay away from if you want to grow in the long run. See, information is what separates you. You need to have the right information. Stock market is not a place where you listen to someone, stockbroker or any particular advisor, be it SEBI, any particular, and you just listen to him and invest with respect to him, and then you give the blame to him. That's how we consider ourselves as the blame game. investors. We're not investors basically of the market. We're blame game investors. We love to give blame to other people. That's the only game we love, right? So taking the blame from other people and making it yourself accountable and responsible, this is what will change you over the long run. If you can do that, you are doing very good as an investor in the long run. But majority people can't. So can you? That's the question. If you just can shift your information and make yourself accountable for every investment or the decision you make in your financial condition, you are the winner. Thank you.